So what is business income taxation? Well, to start with, businesses oftentimes have the option of electing different methods of being taxed. Okay, so if a business qualifies, it can elect taxation as a partnership or as a corporation. Okay, so most entities, if they can, they elect taxation status as a partnership. So most LLCs, partnerships that are eligible, limited liability partnerships will elect to be taxed as a partnership. So profits pass through the entity to the owners of the entity. Okay, and the owners of the entity working for the entity do not receive a salary, they receive a distribution from those profits, and all of the profits in a given year or losses are going to be distributed out to the partners in that given year. Okay, so they'll pay self-employment taxes on it and everything like that. Now, if an entity chooses to do so, and certain entities are required to do so, the entity can choose to be taxed as a partnership, and if as a corporation instead of a partnership. If you're taxed as a corporation, then you can make an election of taxation under subsection S or subsection C of the Internal Revenue Code, where subsection C is double taxation. That is, the entity itself for the first time pays taxes. There is no pass-through of the profits to be taxed to the owners. Taxation is paid at the entity level, and just like individuals, corporations are subject to a tiered income tax structure, an incremental structure. So each incremental dollar could be taxed at a higher amount within certain ranges. Okay, and these ranges are different than that of individuals, and there's no personal exemption or standard deduction there for the business. And then if the business, after it pays taxes, if it has any profits left over or it wants to distribute any of those to owners, that's called a dividend. Okay, so it's taxed again. This is known as double taxation. So the shareholder will pay taxes on the dividends that he or she receives after the corporation has paid taxes at the corporate level. Okay? So no pass-through taxation in subsection C of the corporation. Now, if a corporation can, it will oftentimes elect to be taxed under S corporation status. Well, what this means is it's a form of pass-through taxation that is very similar to partnership taxation, with some notable differences about active and passive loss allocation and responsibility, the ability of your owners to work as employees as well. Some of these things change, but generally the profits of the corporation can pass through to owners who then pay taxes personally, self-employment tax and other, but it's not taxed at the entity level. Okay, so that's the difference between taxation at the C corporation and S corporation status level. So generally, these are the basic characteristics that you're going to see with business entity taxation. It's going to be pass-through taxation under partnership taxation or subsection S as a corporation, but if you're subject to double taxation under subsection C, you're going to have that incremental tiered tax structure similar to that of individual taxpayers, and the entity itself pays taxes as well as the recipient of profits through dividends, which they'll pay a dividend tax rate on that.